Those of you who have been following my reports and my comments know that I have been mentioning the fact that fiscal flows have stalled out. We are now seeing zero growth year over year in federal government spending, what I call the fiscal flows. And isn't it interesting that the stock market has kind of stalled out as well? We've been trading around the 2200 level on the S&P now for some time. So the flows coincide with the behavior in stock prices and also the behavior in the economy. We're going to, I think, and I predict that we're going to start to see some moderating in the economic data. We have the Fed rate hike coming up on December 14th. Now, there's a couple of things I have my eye on with respect to the flows. Number one is the defense bill, which was passed in the House last Friday, and it's in the Senate right now. And that defense bill would add about $9 billion to the original defense bill, which was like a $610 billion defense bill. That'll go up another $9 billion. Doesn't seem like a lot in a government that spends over, $4.5 trillion annually, but every little bit counts right now because we are at zero growth year over year. So $9 billion would put us, positive year over year, and I think that would be enough to just keep this rally kind of creeping higher, okay? The problem with this defense bill is that Congress also has to pass a new continuing resolution by Friday. That's when the existing continuing resolution expires. And for those of you who are not familiar with what a continuing resolution is, because Congress never passed a budget and the budget authorizes the government to spend, they pass what's called a continuing resolution, which is like a temporary stopgap measure which allows the government to spend up through a certain period of time. This is expiring on Friday if they don't pass a new one and the government shuts down. It's not authorized to spend. All right. Now the new one, here's the problem, because I just mentioned that defense bill with an additional $9 billion. They're talking about passing a continuing resolution which fixes spending at the fiscal year 2016 rate. In other words, last year's spending rate, which means that $9 billion, you're not going to get it. Everything will be fixed until, and they're saying this one could go all the way through April of next year because they want to give the Trump administration a chance to, work on their own budget. So you got all that? So, and you may think it's nitpicking by me, but, this is what I follow. These flows are very, very important. Again, it's the water coming out of the pump, filling up the swimming pool. Right now, the water flow is pretty much equal to the leakage, I would say. You need a faster flow of water. So that is what is happening right now. We will see what happens by the end of this week. A lot of things definitely hanging in the balance here. And of course, and I think I mentioned it, we got that Fed rate hike coming up next week, which I don't think the stock market has really reacted to yet. Rate hikes initially, what they cause is a process of lowering multiples, just like rate cuts raise multiples. What does that mean? Well, you know that the price earnings ratio, the P divided by E, normally there's one way to lower that multiple. The E can go up, the earnings could go up, right, the denominator, or the P, the numerator, could come down. That's what I think is going to happen, that the P comes down when they hike the rate, but that'll probably set up a good buying opportunity because that rate hike ultimately will flow into higher income. All right. So that's the breakdown for now. Just waiting to see what Congress does at the end of this week. We'll know more. Bye.